It's a top that trade day. Joining us now, a couple of our favorite leprechauns searching for that pot of gold. Phil Flynn, a Fox Business Network News contributor, and Alan Knuckman, the chief market strategist at bullseyeoption.com, here for our trader game. Round number one, guys, go green. How do you make money in a downward moving market? And what market signal tells you it's time to go from red to green?
A couple of things here. We all know that money moves. Money's not made or lost. It just moves. And we've seen that here recently. So overall, the market's been up in the last decade or so with some pullbacks, but every time we've seen a bounce back. As I've gotten older, I've gotten a little bit more bullish. I'm always looking for bullish markets. On the short side, you've got to be very nimble and grab those profits when you have them, because the markets have come back almost each and every time. One thing I want to point out here is that we're at the anniversary of the Fed starting to raise rates last year. Now, that was a record move, but the market's still holding very solid. We're only 10%, down 10% in the last year of trade after all.
And the Federal Reserve did start to raise rates. The question now is, were they too quickly? And I don't think they moved rates up too quickly. I think the problem is that they talk too much. That's the problem, because I'll tell you this. Every time the market started to go up, I know it's sort of like Alan, but the prices go down. The yields were coming down, but every time the market looked optimistic, the Fed would say, hey, you guys got it wrong. We're going to be raising rates. Hey, we already know that. But I tell you, by the Fed trying to micromanage the market, talking too much, it didn't allow some of these banks to get out of these bad positions. If they would have kept their mouth shut, I think it would have avoided a lot of problems down the road.
There's money to be made on the downside for sure, but I'm gonna blame the banks. Everybody knew rates were going to go up. You didn't know rates were going to go up. You weren't paying attention, or you weren't watching.
I agree with you. But then when the Fed started to talk, it didn't allow you to get out of those positions because it kept hammering it home. The market was giving them a chance to get out. The Fed took that away.
Round number two, cry for Argentina. The weather has been around 20 degrees above normal. What does that do for corn and bean prices here in the U.S.?
There's no doubt that the weather issues in Argentina have been all over the board. We went from frost to drought to too warm to too cold. I think if you look at the global grain picture right now, it looks extremely bullish, not just because of Argentina, but the fact that global grain supplies everywhere you look are well below average and probably at the lowest level they've been since the 1970s. Now, this could present a great opportunity because if you look at the grain markets in recent weeks, it's been hammered because of the fear of a global meltdown. So I think those prices are too cheap. I think it's a great time to be looking at calls on the grain market. It doesn't take that much of a weather disruption to get these prices to skyrocket.
And that's an example of what could happen here for our growing season. Anything can happen with Mother Nature. I'm not a big fan of Argentina. They've got 100% inflation. Our inflation here has been lowered down to 5%. They have 100%. But I do like Brazil right next door, and they're a big bean and corn producer. EWZ, which tracks Brazil, the ETF is at 26. It's been between 25 and 35 for the last year. So we're making a nice bottom base. I'm bullish on Brazil.
On to round number three. Seltzer is not beer. A big corp victory says hard seltzer is not beer. What is your favorite St. Patrick's Day holiday drink of choice? Will it be Constellation Brands or Bud?
All right, let me get this straight. Like last week, we decided that almond milk was milk, even though you don't have to wake up and squeeze it. But now, seltzer isn't beer. I mean, people have more important things to be fighting about. I mean, there's lawsuits on these things. I mean, are you kidding me? I happen to like seltzer. I happen to like beer. And I also happen to like both of the stocks, Budweiser and Constellation Brands. But if I have to pick one or the other, I think I'm going to go with Constellation because they have a lot more spirit, if you know what I mean.
All right, so Constellation Brands has been between 200 and 250 for almost 2.5 years. And so we're 215. So it's got a lot more upside potential and a breakout. Budweiser is still positive in the last year of trade, but it's kind of been just moving along here between 55 and 60 for December, January, and February. So breakout target 65. Both these stocks have held up real well. So if you're going to not drink, you can look at Coke. Coke is a very conservative placement between 55 and 65. That target 75. And we're right at that midpoint right now, so we can see it bounce in Coke.
Maybe what we need is green seltzer. We have green beer, no green seltzer. Maybe that's the problem.
On to your bonus round question for today. I'm going to read a statement, and I need you to tell me if it's all true or all false. Chicago uses 50 pounds of dye to turn the river green at a cost of $133 million, and it lasts for 5 hours. All true or all false?
I would, all you see when you use all, I have to say false, just because you use the word all.
Oh, come on, you guys. It's all true.
The river's still green today. And I'm telling you, they put it in last Saturday.
Well, as a consolation, we'll send you a couple of deep dish winner chicken dinners. Go to businessfirstam.com for where to see our show on TV.